Hi everyone, this is Jamin Kirkwood from Secure Financial Management with your July 2016 economic update. In this video, we'll talk about some of the economic headlines that influenced markets last month and give you some insight into what they might mean for you as an investor. Please stay tuned at the end for a required disclosure statement. Well, as the first half of 2016 ended, the economy seemed to be repeating a pattern seen in 2014 and 2015. A poor first quarter giving way to a better second quarter. Monthly indicators showed improvements in consumer spending, retail sales, manufacturing, and consumer confidence also rose. And for the first time in history, a country voted to leave the European Union. News of that vote stunned financial markets worldwide in June, to an even greater degree than the multiple terrorist attacks carried out by ISIS and its sympathizers. Bullish sentiment ultimately won out on Wall Street during a volatile quarter as the S&P 500 rose 1.9% in 3 months and the Federal Reserve left interest rates unchanged, which could be the case for some time. In domestic economic health on May 27th, Federal Reserve Chair Janet Yellen reflected on the potential of an interest rate hike at Harvard University, commenting that probably in the coming months such a move may be appropriate. Other Fed officials were making hawkish statements of their own. At the end of the second quarter, a summer rate hike, though, looked decidedly inappropriate after the UK voted to leave the European Union. While Wall Street will likely not have to worry about an interest rate hike for the rest of the year, investors and economists alike may be a bit worried about the labor market. That's because in May, the economy added just 38,000 jobs, and the government scaled down its estimate for hiring from March and April by a combined 59,000 jobs. In global economic health, equities around the world had rallied immediately before the Brexit referendum in the United Kingdom, as polls indicated the Remain campaign might triumph over the Leave movement. When the opposite occurred, global markets went haywire on June 24th. On that day, the German market lost 6.82%, Japan's Nikkei index lost 7.9%, and the French stock market lost over 8%. The pound also hit a 31-year low versus the dollar, and both Standard & Poor's and Fitch quickly downgraded their credit rating for the UK to AA. The EU now faces some unsettling questions. Will other nations now vote to leave the European Union following the UK's example? Will the Brexit weaken the euro? Could it destroy the economic recovery evident in Europe? If central banks also act to bolster financial markets through stimulus, will their actions amount to anything more than an economic band-aid on these political problems? These questions will be vital in the coming months and years. Looking back and looking forward, after the Brexit news, we are now focused on the question of if Wall Street has regained its footing here in the third quarter. You could argue that the third quarter could be less volatile than some analysts expected. However, the exit of the UK from the EU leaves some huge question marks for investors about the UK, EU, and global economies as a whole, but the answers will take years to emerge. In the near term, what seems almost certain is that the Federal Reserve will avoid raising interest rates. That alone may breed a little confidence and lead investors to refocus on corporate profits and earnings guidance. Will the next earnings season be slightly better than we expect? Will we see some earnings growth again in the third quarter? Now, of course, the US economy cannot divorce itself from the effects of the Brexit, but US investors expect to see the federal funds rate near historic lows for some time, meaning potential significant headwinds against stocks may have disappeared for 2016. That's it for the July economic update. As always, if you have any questions or concerns about what we've discussed, please give our office a call at the number below. Once again, this is Jamin Kirkwood with Secure Financial Management, signing off for the month of July 2016. Now, please remember that nothing we talk about here should be taken as a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 210-428-6250. We'd be happy to speak with you.